Namaste, Namaskara, Vanakkam. The very first question in CA Intermediate income tax paper is going to be from total income computation for 15 marks. And that question will have so many adjustments from different heads of income. You know what? Majority of the adjustments in every attempt, they will ask you from the PGBP topic itself. And if any one adjustment goes wrong, your total income will not match and you may lose a lot of marks. But the good thing is that if at least those adjustments which you do right, you will get marks because stepwise marking is possible, and that is why you must have knowledge of maximum of the adjustments which is asked in the question. In this video, I'll be discussing Talaiva Super 50 adjustments for your examination, which is going to be very helpful. And I am damn sure in the total income computation which is going to come for the next attempt, most of the adjustments will be definitely around this super 50 adjustments only, guys. So be tuned in the videos till the last minute, and I'm sure just within 15 to 20 minutes you will cover all the adjustments which are possible in the total income computation question. The first adjustment is depreciation claimed as per accounting method. We know very well depreciation we have to actually claim as per the income tax rules. So if already in the debit side of a profit and loss account you have already debited the depreciation as per the accounting method, then you have to add back the depreciation, but you have to reduce the right depreciation as per the Income Tax Act. Interest on income tax refund credited to profit and loss account. Say for example, in the question it is given that income tax refund is given. Only income tax refund, then we have to reduce it because income tax refund is not an income. First of all, it is not a business income. You already credited to profit and loss account. So reduce from the profit and loss account, from the net profit. And income tax refund we will not offer to income from other source, but interest on income tax refund is an income for you, that alone will go to IFOS. So interest on income tax refund reduced from the net profit. Income tax refund is not taxable, we will not offer income from other sources, but interest on income tax refund is an income that will be taxed under income from other sources. Agriculture income credited to profit and loss account. Lot of times in the P&L statement, on the credit side they'll give agriculture income so and so. That is not a business income. First of all, that is an exempt income, guys. So we need to reduce from the net profit, but we will not offer it to tax anywhere because it is an exempt income. So reduce from profit and loss account or income and expenditure account, whatever they'll give you, it is exempt income, not taxable under any other head, guys. We have to just leave it as it is. Penalty for breach of law debited to profit and loss account. Guys, penalty for breach of law is disallowed, but penalty for breach of a contract is a allowable expenditure. So it is a breach of law, so add back to net profit because we have to disallow. It is not a business expenditure, guys. For penalty for breach of a contract, I just now told you it is a allowable expenditure. It is already debited to profit and loss account, then there is no adjustment needed because it is allowable as a business expenditure. So allowed as a business expense, no adjustment is needed. Coming to interest to bank is paid after end of previous year but before due date of filing of return of income. Guys, if you remember, section 43B has some list of expenses, like interest is one of the expenditure in that. If you do not make the payment of interest before filing the return of income, in that case the interest will be totally disallowed. Here it says is paid after end of previous year but before due date of filing of return of income. It is absolutely correct. There is no need of any kind of disallowance under section 43B because the interest is paid before due date of filing of return of income. It is allowed as deduction. So here you see allowed as deduction. Section 43B is not breached. We have complied with the conditions. GST tax paid after end of previous year but before the date of filing of return of income. GST is also one of the taxes, is one of the expenditures which is mentioned under section 43B list, which has to be paid before filing the return of income. Here GST is paid after the end of previous year but before filing return of income itself. So it is also in compliance with 43B. There is no need of any kind of disallowance here also, guys. Allowed as deduction, section 43B is not breached. Opening stock omitted to be recorded. Guys, you forgot to consider some opening stock. Now imagine in the profit and loss account, on the credit side you would have opening stock. If it is a on a sorry on the debit side you would be having the opening stock. Guys, if you have already forgotten to consider one of the debit side items, then you will reduce this, whatever omitted opening stock is there, you will reduce from the net profit in order to correct the profit. So you will reduce the omitted opening stock from the net profit. The next one is closing stock omitted to be recorded. Exactly the same way. On the closing stock will be on the credit side, and if a credit side item you have already forgotten to consider, then we will add to the net profit. So this omitted closing stock has to be added to the net profit which you have on your hand. Excess opening stock recorded by mistake. By mistake, you have considered more opening stock, means you have reduced the profit already excess. So you have to improve the profit now. So you will add back. In order to increase the profit, you have to add back that excess opening stock. We will add back to the net profit. Now coming to excess closing stock recorded by mistake. On the credit side of your profit and loss account, you have added more closing stock, that is giving or increasing your profit already. So you have to reduce your profit. So you will less this excess closing stock, reduce from the net profit. Next one, payment of expenses made without a deduction of TDS. Guys, you know very well there is a section 40A1 and 40A1A. 40A1A says if any payment is made to resident without deduction of TDS, 30% has to be disallowed. So disallow or add back 30% of such expense from the net profit. Guys, payment of expense made without a deduction of TDS, but this is to non-resident. If you remember, if you make any payment to non-resident without deduction of TDS, in that case 100% of such expenditure has to be disallowed. 100% we will disallow. Next, expenses for expansion of new business and project which was abandoned without creation of new asset debited to profit and loss account. Guys, if you want this PDF, I will leave this PDF in the Telegram channel. The Telegram channel link is there in this video's description. Guys, do check that out. Yes. So expenses for expansion of new business. So you started a new business, but that project has come to an end. Guys, it is totally a capital expenditure. We will not allow this because this is a purely a capital expenditure. Payment for any expenditure debited to profit and loss account made other than in prescribed modes. If you remember section 40A3, if you remember section 40A3, it says that if any payment for expenditure is made more than 10,000 in a single day, in a single transaction, in a single day, other than in the prescribed mode, that expenditure has to be disallowed. So guys, this will be disallowed or added back. Purchase price of any asset debited to profit and loss account. If you purchase any asset that you cannot debit it to profit and loss account, you have to take it to the block of asset and you can claim depreciation on that. So we will add back the asset value, but we will reduce the depreciation. So add back the full value to the net profit, but reduce depreciation on such asset. Unreasonable amount paid to relative and claimed as expenses in profit and loss account. If you make any unreasonable expenses, excess expenditure made to a relative, that excess expenditure has to be disallowed, guys. So add back such unreasonable expenditure. Interest on loan taken for payment of income tax. Guys, always remember one thing. Any kind of income tax related expenditure will be straight away disallowed. It can be interest, penalty, income tax, interest on income tax, loan taken for payment of income tax, anything, guys, not allowable as expenditure. It is related to income tax. Income tax claimed as expense in profit and loss account. Just now I told you, any kind of income tax related expenditure, straight away disallow or add back. Interest on income tax claimed as expense in profit and loss account, disallow. This is also interest on income tax. So any kind of penalty, fees, nothing is allowed in relation to income tax. But remember, GST related tax is allowed. Interest on GST is allowed. Late fees for GST is also allowed, guys. Dividend income from shares credited to profit and loss account. Dividend is the income from other source item. You have credited in the profit and loss account, which is wrong. So we will reduce from the net profit and we will offer it under income from other source. Reduce from net profit, offer it under income from other sources head. Interest income from loan or investment credited to profit and loss account. Guys, if you have given loan to someone, you got interest, that should also be taxed under income from other source. So reduce from the net profit and offer it under income from other sources head. Payment for purchase of agriculture produce dairy made in cash more than 10,000. Guys, if you there is a rule 6dd which is exceptions to section 40a3 where you can make payment more than 10,000 in cash, and one of the exception is when you make any payment for agriculture produce purchase purpose, so there is no adjustment needed. If you have already debited to profit and loss account more than 10,000 though you made in cash, it is absolutely allowed, not there is no need of any kind of adjustment. GST tax claimed as expense in profit and loss account. I told you GST is absolutely business expenditure, no adjustment needed, allowed as business expenditure under section 37. Interest on GST and late fee for filing of GST is also allowed, guys, absolutely not a problem. But guys, always remember, penalty, any kind of penalty for breach of an act is disallowed under the income tax act. So if you paid penalty for GST, you're breaching the GST law for which you are paying the penalty, so that is disallowed, it has to be added back, guys. Provision for income tax debited to profit and loss account. You know what, remember always one thing, any kind of provision under income tax act is not allowed. So provision for income tax disallow, provision for doubtful debts disallow, but if there are actual bad debts, you can claim it as expenditure, guys. If any business asset used for personal purposes, guys, you know very well, any kind of personal expenses are not allowed as per the income tax act. If a business asset is used for personal purpose, then whatever depreciation is there in relation to that asset, you need to disallow that. So guys, very simple, add back depreciation to the extent you used for personal purpose that asset. Expense on right issue of shares debited to profit and loss account. Guys, right issue for increasing the capital, if you spend any kind of expenditure, that is a capital expenditure. So whatever expenses you incur for right issue has to be totally disallowed because it is capital in nature, guys. Festival gifts given to customers, guys, you know what, any kind of expenditure you incur for your business purpose, it is spent for business, so it is allowed as business expenditure, no adjustment is needed, absolutely. Remuneration to non-working partner debited to profit and loss account. If you remember section 40b, where we calculate the disallowance to the extent of excess remuneration or interest paid to partners. In that case, the very first line I taught you in the class is any payment made to non-working partner is not allowed, though it is within the limits, guys. Only payments made to working partner is allowed within the limits prescribed. So add back to the net profit, only remuneration paid to working partner is allowed. Mind you, this is a non-working partner. Remuneration or interest payments pertaining to period before the partnership deed. Guys, if you remember section 40b, it says that whatever payment of remuneration or interest is there, it has to be authorized by the partnership deed. If the deed itself you made later on and you want to authorize the payments before the deed making date, it is not possible. Even if the deed retrospectively gives the authority to make the payment, still it is not allowed. You can only claim the deduction of remuneration or interest which has paid to the partners after the date of getting the partnership deed into picture. Before the execution of partnership deed, whatever interest and remuneration paid to partners, absolutely totally disallowed, guys. Add back to profit, it is not allowed, guys. Next, bad debts pertaining to earlier year if recovered in current previous year. Earlier year there were bad debts. If it was allowed as deduction in the earlier years because it was actual bad debt, then in this year you can claim the, you can offer the income to tax, guys. You have to offer that income to tax because already you claimed bad debts earlier. Now you have recovered the bad debts, it has to be offered to tax, so you will add it to the net profit, guys. Offer it to tax as business income in year of recovery, but make sure in earlier year it was recorded as revenue, as a revenue expense, and was actually allowed as a bad debt in the earlier year. TDS on expense payment to resident was deducted but not deposited with government before due date of filing of return of income. Just now I told you in 40A 1A, if any kind of payment has been made to a resident, 30% has to be disallowed if TDS was either deducted and not deposited, or it was not deducted. In both cases 30% will be disallowed. Bonus share issue expense, guys. Bonus share is just a distribution of profit. So in that case, there will not be any kind of adjustment, guys. It is properly allowed. Provision for gratuity basis actual variation debited to profit and loss account. Provision, I already told you, any kind of provision, it is not allowed under Income Tax Act. So provision for gratuity, it is not allowed, guys. It has to be disallowed. Fees under section 234E for late filing of return of income. Fees is allowed. Penalty is not allowed. Both are different things, guys. Always remember, fees is different. Penalty is different. Penalty for breach of act is not allowed, but the fees is allowed. So fees under section 234A not allowed, as it is income tax related expenditure. First thing you have to remember, income tax related any kind of expenditure is not allowed. But fees for late filing of GST returns, you can claim it as expenditure because that is a fees and it is related to GST. Here it is fees, this is allowed. But the problem is this is related to income tax. So that is why it is not allowed, guys. Interest under section 234A, B, C claimed as expended in profit and loss account. Any kind of interest related to income tax is absolutely not allowed, guys. This has to be totally disallowed and you have to offer it to tax. CSR expenditure debited to profit and loss account. It is not a business expenditure. Exclusively it is given, and that is why we have to disallow this CSR expenditure. You have to add back to the net profit. Conversion of interest payable into the form of loan is claimed as expenditure. If you convert interest payable into principal loan itself, that is just a conversion. There is no payment happened. So section 43B says unless interest actually paid, you cannot claim it as expenditure. So just for conversion, you cannot claim it as expenditure, guys. So conversion of interest payable, you have to add back. Only actual interest payment, whatever you made, has to be allowed. Payment to MSC made beyond the time limit under MSME Act. Guys, if you remember, section 43B clause H says that the payment to MSME has to be made within the dates prescribed. If there is no agreement, you have to make the payment within 15 days. If there is an agreement, maximum within 45 days. So if it is not made, guys, in that case, it is not allowed. Only the payment made within the time is allowed. Personal expenses debited to profit and loss account. Personal expenses always disallow. Repairs of capital nature of an asset. It is a capital expenditure. Again, it is not allowed. You have to add it to the asset value only. Installation expense of machinery debited to profit and loss account. This is not a business expenditure. This is asset cost of acquisition itself. So you have to add it to the block of asset, add back to net profit. It is a capital expenditure. Add it to the asset value and claim depreciation on that. Municipal taxes in respect of residential house property debited to profit and loss account. Guys, municipal taxes relating to residential house property, you can claim it under income from house property if it is a let out property, but you cannot claim it under PGBP, guys, because it is not resident. It is not the building used for business purpose. Amount disallowed in earlier previous year as per section 43B due to non-payment on or before date but paid in current year. So earlier year, before filing the return of income, you did not make a certain payment which is prescribed under 43B. But this year you made the payment. So in this year you can claim it as expenditure because it was in the last year disallowed. So this year we will allow it in the year in which the payment is made. So allow as deduction in the current previous year in which the payment was made. Profit on sale of capital asset credited to profit and loss account. Guys, if you sell any capital asset and you made any profit out of that, you have to offer under capital gain and not under the PGBP head. So guys, reduce from the net profit, offer it under the capital gain head. Remission or cessation of trading liability by the vendor. So any one of your vendor has remitted or has remitted any trade liability which was earlier not considered. So consider that as income under PGBP and you have to offer under tax. Gifted to employees, guys, always allowed as business expenditure because employees are working for your business itself, and whatever gift you give to employees are allowed as business expenditure. Guys, if you want this PDF, it is actually in the Talaiva notes. You will find in page number. This is a copy of Talaiva notes, guys. This is copy of Talaiva notes. If you go to Talaiva notes page number 167, you will find it. My Talaiva notes, you will find it in Telegram channel, guys. If you want the Telegram link, it is available in this video's description. You can click on that. I'll be coming up with super 7 questions, and I already uploaded a lot of amazing content for this coming attempt for income tax paper, 100% English language. So definitely you have to subscribe to the channel if you want to enjoy this kind of amazing content for your income tax paper, guys. Okay, that's all from my end. Namaste, namaskara, vanakkam.